A lot of people don't understand how credit scores work, despite the fact that these numbers have a huge impact on many parts of your life. In today's video, we are going to deep dive into credit scores, and we will begin right now. Credit scores are actually a relatively new concept, as they were first introduced in 1989 by Fair, Isaac and Company, and they also named the score after themselves, FICO. In Canada, we also call this FICO score a beacon score. Before this, credit was up to the individual lender, and they really had no way to know if you were a financially stand-up sort who was going to pay them back. This score was looked at to standardize how lenders would evaluate people for their loans. Your credit score can range from 300 to 900. When a lender looks at the score, the lower it is, the greater the chance that lender may deny you a loan. Generally, if your score is less than 550, you are very unlikely to get accepted for a loan or a credit card. If your score is between 550 and 720, you may still get turned down, or if you do get accepted, you will have higher interest rates. The prime place to be is 720 and over, where you should not have too many issues securing loans or credit cards. To make this more confusing, in Canada we have two different credit reporting agencies that both calculate your credit score, and those scores can be a little different as their calculations vary a wee bit. TransUnion and Equifax are those two agencies, so often when you need to check on your credit, you need to inquire with both of these agencies. It is always a good idea to build your score, even if you have no intention of getting a credit card or taking out a loan. Your credit score has moved beyond just being used for lending. Many apartments will not rent to you if your credit score is too low. Some employers will run credit checks on potential new hires to get a feel for how reliable you may or may not be. In Nova Scotia, Prince Edward Island, and Saskatchewan, a credit check can be run on you provided they tell you they are going to do it. In the rest of Canada, they need your written consent. Unfortunately, both TransUnion and Equifax do not share the exact formula they use to calculate your score. However, we have a very good idea how it all comes together. The biggest component of your credit score is 35%, and that 35% is all about your payment history. In a nutshell, making your payments on time goes a long way towards boosting this part of your score. Always make the minimum payment and make it on time. Even if there is a dispute with the bill, still make the payment and get a credit back once the issue is resolved. In the worst case situation where you cannot pay a bill, talk to the lender and work it out, as it will minimize the damage to your credit score. 30% of your score is based on usage capacity. If you max out your credit cards, it hurts this part of your score. By only using a smaller portion of your available credit, it boosts your capacity numbers. If you use most of your available credit, lenders can see you as a greater risk even if you pay your balance in full every month. A good rule of thumb is to keep your overall usage down to 35% of your available credit. Do not ever go over your credit limit, as this can really hurt this part of your rating. 15% of your score is based on the length of time you've had good credit. A longer history boosts this part of your score. If you transfer an older credit account to a new one to get a better deal, that new account does not keep the credit score benefits of the older account. It is often good to keep the old account open, even if it is just to reap the time reward on your credit score. 10% of your score is based on how many new credit cards you have. When you start a new card, it does hurt your score for a little while. Hard inquiries will also hurt your numbers, so applying for a lot of cards can really tank this part of your score. Soft inquiries are fine and do not impact your score. A soft inquiry is basically like requesting a copy of your credit report, or if a business wants to update their records with the latest version of your credit report. Sometimes when you're applying for apartments, they can run either a hard or soft check. I would ask just to be sure, because when you're looking for a place to live, you may apply at multiple places, and if they're all running hard checks, it could certainly hurt your credit. 10% is based on a mix of credit. More cards overall, also other types of credit, such as loans and mortgages, help this part. Keep in mind you don't have to go overboard, but just look for a little diversification in the type of credit you have. When it comes to the actual report, there are two types of information that are kept on your credit report. There is the positive stuff, which can stay on your report forever, which is a really good thing. Then there is the negative stuff. And if you are dealing with bad credit, you know that stuff tends to hang over your head for a long time. Luckily though, it is not forever. Most negative information, like a missed payment, a bankruptcy, or an account sent to a collection agency, can stay on your report for 6 years. However, TransUnion can keep a bankruptcy on your report for 7 years if you filed it in New Brunswick, Newfoundland, Ontario, Prince Edward Island, or Quebec. If there is a judgment against you, such as losing a court battle, that can stay on your report for 6 years, except in New Brunswick, Newfoundland, Ontario, and Quebec, where TransUnion keeps it on for 7 years. Unfortunately, if you live in Prince Edward Island, TransUnion keeps those judgments on your record for a full 10 years. Consumer proposals can stay on your report for 3 to 6 years. It is always a good idea to check your credit report to ensure the information is accurate, and in rare cases, to spot if someone is trying to steal your identity. A lot of credit card checks on your account that you did not make is a huge red flag when it comes to identity theft. In those cases, you should contact any lenders involved and report the fraud to them, as well as reach out and report the fraud to both credit agencies. You can also add a fraud alert or a verify identity alert to your credit score. These alerts will tell potential lenders to contact you and verify your identity before considering you for credit. To add one of these alerts to your credit score, you would have to contact TransUnion and Equifax to make that request. What if you have no credit? Having no credit can impact your score pretty hard, as you lose all the points for credit history and length of credit. As a result, you may have to look at getting a cosigner on a loan, or look at getting a secured credit card that you can use to start building your credit. Once you get that credit history building, it does not take long to start to see a much better score grow, provided you avoid the bad credit habits that can derail you for, well, the next 6 years, 7 years in some circumstances. Always be sure to remember how the score is calculated. If, for example, you have a secured card for $500, keep usage in mind and only let the balance get to $175, which is 35% of the total. If you need more than that on the card, then look at increasing the secured amount instead, so you can respect that 35%. It is all about building positive credit habits, and once those are clear to see for the credit score algorithm, your score will be prime in no time. If you guys loved this video, be excited. There is way more to come. Until then, why not watch one of these videos? And before you jump into that content, just be sure to like and subscribe to support the channel. I'll see you in the next video.